Have you ever heard the terms infinite banking or family banking or become your own bank? These terms are strategies that are employed by the wealthy. They're available to all of us today. And guess what? You don't have to be wealthy to start. Let's learn how. This strategy is simple. You take out an insurance product that you can take loans against your death benefit. This means you can use portions of your death benefit while you're alive. Most insurance companies offer this in their whole life and index universal life products. When these plans are properly set up, you will reap the most benefit. There are many ways to set up these policies. We look at some of the pros and cons at the end of the video. Insurance companies assess their clients. Each company, before they issue a policy, completes their underwriting. This means they have calculated how long you are going to live. They use sophisticated life expectancy calculators to predict how long you will live and can pay premiums. The insurance companies with these policies are willing to give you a portion of your death benefit while you are alive. So, here's the best part. There is no bank involvement, no loan officer. You are in control and you can do the setup online. And since you are borrowing from your death benefit, the interest rate is very low. It's that simple. You can use the loans from the policy to start a business. I mean, Walt Disney did that to create Disneyland. Or you can use the money to expand your farm, just like Foster Farms, whose net worth is now estimated at over $1 billion. You can choose to pay back the loan or not. If you choose not to, then your beneficiary will receive a reduced death benefit. The loan will be deducted from the final amount. Let's expand on this concept so that it's clearer for you. There are many ways to set up an IUL. The wrong way would be to take a policy with a high death benefit with the hope of borrowing money from it. If you try this, then you will lose money. Most of your premiums will go towards fees for covering a large death benefit. You need to allocate more of your money to the savings portion of the policy so it will grow more. Always choose a policy you can afford. If your strategy is to build cash value, then you have to set it up to do so. A financial professional can assist you with this. To set up a policy to build cash value, one of the many strategies used is to take the lowest death benefit your premiums will allow. You also need to set it up to have an increasing death benefit. The fees are the highest in the first few years to pay the policy, so this is the reason to start with a low death benefit. In this way, your cash value and death benefit match up after a couple of years, allowing you to take out a loan or set up a distribution when you retire so that you get tax-free retirement money. When you use this strategy, one of the best ways is with an IUL. Using an indexed universal life or IUL insurance policy as a personal bank involves borrowing against the cash value of the policy while letting it continue to grow. These types of policies have the added benefits of having coverage for critical, chronic and terminal illnesses. Here's a breakdown of how it works and the steps involved. 1. Understand IUL basics. Indexed growth. The cash value of an IUL grows based on the performance of an index like the S&P 500, but it typically has a cap and a floor. This means your account will see growth of the S&P 500 up to a cap, and if the stock falls below zero, you're protected so that your money never goes into the negative. This means you get upside potential without risking loss from market downturns, such as investing directly in stocks, crypto, or as in a 401k. Premium payments. Your premium payments fund both the insurance and cash value. Over time, the cash value grows, especially if you've paid in higher premiums. Building cash value over time is, well, a process that requires patience and consistency. For the cash value to grow significantly, an indexed universal life policy, or IUL, needs consistent funding beyond the minimum premium. This is often referred to as overfunding. Overfunding accelerates cash value accumulation, which is crucial for maximizing the benefits of your policy. It typically takes several years of contributions for the cash value to accumulate sufficiently for borrowing. So it's important to stay committed to regular contributions to see the long-term benefits. When considering this strategy, there are some risks to keep in mind. Policy loans usually have interest, so it's critical to compare this loan against other lending options. A financial professional can give you quotes from multiple companies so you can make an informed decision. Click on the link in the description box or comment section. If you borrow too much and can't cover loan interest, the policy might lapse, which could trigger significant tax consequences. If you take a loan, please use some of the money to keep the policy active. It's worth it. Take, for example, if you lose your job, you can take loans against your policy to pay off debt and keep the policy active until you get on your feet. Also, since the cash value growth is linked to an index, returns are not guaranteed and vary with market performance. Here is a quick summary. Using an indexed universal life policy as a personal bank allows you to access cash value tax-free without affecting retirement accounts. This approach can be especially useful for funding large expenses, leveraging cash flow, or supplementing income. However, it's essential to structure the policy well-funded adequately and understand loan terms to maximize benefits and avoid potential downsides. Consulting with a financial advisor who specializes in life insurance strategies is a good idea to tailor the approach to your needs. We love to hear your feedback, and we can show you examples of policies that have consistently done well year after year because they have been set up right. If you have a policy, regardless of where it's from, that has not been set up right, let us know so we can help. All consultations are free. If you need quotes, please use the email below or set up a meeting using the link below. We are here to help. Please like and subscribe for more topics that affect your finances.